he will present on the VP Bank liquidity management, and I think yes, we can start with an overall introduction from Mr. Chung, and then we leave it for you to have a question to Mr. Chung. Yeah,
great.
Yeah, please.
Yeah. So good afternoon, everyone. Yeah. So I will try to keep it very short, and then maybe a little bit more time for your question. Yeah. So under my division, there are 3 areas, right? The ALM, the FI, and FM. FM is both trading and sales. So this today I think we mainly focus on the ALM part. I think, yeah. So it's more role responsibilities and what we are doing on a daily basis, right? So basically, the mandate here is number 1 is compliance. We need to keep basically maintain the right liquidity ratios, State Bank of Vietnam ratio, lenders ratio, as well as expectations from rating agencies. So these are the things that we try to keep. Number 2 is we need to also maximize our banking book NII. So basically, if we have a target of 35% credit growth, we have to try to have enough funding and etc. Try to also control the cost of funds for the banks, as well as promote lending to businesses in line with the strategy and the business plan. So our main internal counterparts are the business divisions. Right? Number 1 would be the business, all the business divisions, and then to some extent the finance and the market risk, right, functions. So these are the kind of the key counterparts internally that we work with. We have normally we have ALCO, but we also have mini ALCO. So here we have weekly mini ALCO and we have a monthly ALCO. So that's in the mini ALCO. The mini ALCO I will chair, and they are representatives from businesses, all businesses, and finance in the mini ALCO, and the ALCO will be chaired by our CEO. Yeah. So of course, apart from liquidity management, right? We also have to manage the interest rate risk management, because interest rate risk is certainly also very essential for Vietnam. We have usually quite very volatile interest markets in terms of both, we call here market 1 and market 2. Market 1 is where we deal with corporate and retail customers. And market 2 is more or less the interbank markets and professional lenders. So interest rate varies a lot in between markets, and also fluctuate a lot in the local market, because I think there are lack of a clear intervention from State Bank of Vietnam to assure that there is adequate interest rate level in the markets. For liquidity management, apart from all the regulatory compliance ratio, we have always been trying, at least, right, to maintain a funding buffer. We call it a funding buffer. In this year, for instance, there are times that we had, I think, more than 3 trillion, more than $3 billion equivalent in funding buffer. I think back perhaps in July. I don't remember the exact time. Yeah, but usually our average funding buffer this year perhaps is well above $1 billion. the reason for me doing it, even it is very costly for us, but it is for the sake of, allowing balance sheet to grow. And, if we have a lot of drawdown, and also we have volatility in liquidity as well, right? Then having a big funding buffer always give me the assurance that I can manage liquidity, my liquidity well.
And this is a buffer above what?
Yeah. So normally we will calculate the buffer based on the funding, the equity, available equity, minus all the assets, right? And minus all the liquid assets required to meet a prudential ratio, right? So basically, it's beyond the liquidity, the HQLA required for the banking book management. So this is a true buffer, right? It's not like a liquid assets in a sense, right? What else? I think in terms of that's more liquidity, right? In terms of fundings, I mean, you know well. So we try to diversify, really diversify and committed to different funding sources, right? So including borrowing from international lenders, even when it was quite expensive for us, especially in the years of like 2024, on mostly this year as well, because Feds keep interest rate very high, right? And we have to pay more than 2% in terms of like of a credit spread to lenders, right? So it always makes this fairly expensive for us. But this is a mid to long-term funding, which is critical for our funding structure. Yeah, in terms of retail, basically we have different business divisions, but we see in the market here, retail is perhaps the biggest source of funding. So in the markets here, amongst our peers, there are about 60% of funding source from market one only, right? It comes from retail. At the moment, we are about also nearly 60. Our strategy is actually pushing further forward to like 60, 65, but it's very tough. Yeah. So there are banks which have lower ratio, like Vietcombank or Military Bank, because they are state-owned or semi-state-owned. They have a lot of state-owned companies which have high level of cash, and put deposit to them. So so they have a much higher ratio of corporate deposits compared to banks like us or ACB or Techcombank. So ACB, for instance, they have about 70% of more than 70% of their deposit based on retail. Right? Even within retail, we see between ticket size less than 2 billion Vietnamese đồng per customers is a lot more stable. It's a rollover rate of 65 to 70%. Whereas if you have a customer with 20 billion or 30 billion Vietnamese đồng, then the rollover rate can vary. It can go down to like 40% to 60, 70%. Yeah. Likewise, also corporate customers. I must say that in terms of funding concentration, we do have. I don't have the number here, but I think that still it contributes to a small part of our fundings, given that we also have some corporates which put a lot of money with us. But given the size of the balance sheet that we have, it's still significant. It's still a small portion. Yeah. Funding risk in Vietnam generally considered to be high, given that State Bank of Vietnam do not have a real good mechanism to support market liquidity. like in the other markets. So this is, it gives additional pressure for us and prudence also for us to manage our liquidity. But as like I shared with you, I think 2 days ago, right? It's very, it's the same, like, okay, markets fluctuate like this, but in a way, there will be a stable line. But I mean, there is perhaps a bigger variance in Vietnam compared to most of the more developed markets. So if I can say that at the moment we see the long-term Vietnamese interest rate would be somewhere in between 6 or 6.5%. Let's say a 12-month bank deposits. This to me is a kind of the right number, but the variance is high. So it can be as low as like 4.5, but as high as 8.5. Yeah, so that's making it more difficult for us. But to manage, yeah. So if we we had a chart looking at the performance of different asset class in the last 3 years. So from Vietnamese đồng, US dollar, gold, VN index, bitcoins, and yeah. So this perhaps these are the key asset class, and the Vietnamese đồng with the interest rate in the last 3 years is the worst performing. It's even worse than the US dollar because US dollar appreciate a lot in value against the đồng, right? Even US dollar most of the time have a low interest rate, but it appreciate in value, right? And that's the reason why recently we see an outflow of deposits, right? We also have real estate as an asset class, and Vietnamese đồng is the lowest performing asset class, right? And that actually clearly indicates that interest rate for the đồng has to adjust. And we saw a lot of the increase in interest rate for the đồng in the local market recently. But again, right? So things are at the price for Vietnam, in Vietnam. Also the same with liquidity. So what we saw in 2023, early 2023, is that when we had a kind of mini crisis, end of 2022, then we saw interest rate for đồng also in the bank rise to 9%, or maybe even a little bit higher, but most of the time like 8-9%. But then liquidity comes back strongly in 2023 because once people see a parity between Vietnamese đồng performance versus the other asset class, they will come back to Vietnamese đồng. So that's always the case. So I think Vietnamese people perhaps have a strong mentality of trading, maybe a bit of gambling. Yeah. So, but I'm sure that if interest rate come back to 8%, there will be a lot of money coming back to the system.
Can you maybe just clarify as an understanding here? So you mentioned that VND was gross.
Yeah, the VND also and together with the yield of the interest rate.
So meaning, is the currency depreciated and the interest was not enough to compensate for depreciation of the currency?
Yeah, something like so. Basically, we calculate the VND based on the interest rate of the VND.
Yeah.
The US dollar will be calculated based on the exchange rate plus the US dollar interest rate.
Yeah.
If let's say we are free in free market and there's no regime of zero interest rate on US dollar, right? And the same with a cryptocurrency.
Yeah.
Then we just translate it. There's no interest on it, right?
Yeah.
So we just translate the nominal value together with the exchange rate of US dollar. Then we have the performance of a crypto.
But then Would it mean that people would rather try to exchange in US dollar and deposit in US dollars? So just
People
to,
can, yeah. So basically,
Or
if I am the owner of Vietnamese dong, I can consider different options. Either I change it into a US dollar, or I buy crypto, I buy real estate, I buy VN index.
okay. So actually, to gain deposits was most difficult part because it was less appealing product
Exactly.
compared to all others.
Yeah, and especially in times of major increase in other asset class, like VN index, like crypto, and like gold. Gold is also crazy, right? It has been crazy. Yeah. So, but I'm confident that once the interest rate level stabilized and corrected at a high level, liquidity will come back to the system. Same pattern in what we saw in 2023. Yeah. One thing is, I think that's I can be quite sure is even with the fluctuation of the dollar rates, right? One thing I'm quite sure is the current account of Vietnam. Yeah, it's quite good. So we're talking about export minus imports plus repatriations of profit from FDI, right? And also money transfer from Viet Kieu overseas workers, tourism industries, remittance of outflow from like people with having children studying overseas. So everything, right? Expats here, people living here, spending here, or maybe transfer overseas. So we have a good visibility of Vietnam current account. It's not maybe it's not as good as China sometimes ago, but it's okay. Right? But the thing is that if we keep the interest rates too low, then we will see outflow. Right? We will see outflow because especially in time when US dollar interest rate was very high. And this is what we have seen in the last 3 years also. So what else should I cover? If you have any hints, then let me know. I mean, if you have any questions, just jump in.
So maybe I interject one question here. So the interbank interest rate has been very, very high. The interbank interest rate has been very high, right? But we have not seen a significant increase in deposit rate from bank. Is it because the SBB?
It has.
It has, but
it has increased a lot. You don't see it enough in the published rate, but the actual rate has already increased a lot. The actual rate, I already have to approve 8% interest rate today. Yesterday and today, 8%.
Is it 12 months or?
6 months, 12 months, I already approved 8% interest rate. Okay, so it has increased a lot. And even retail markets could go as high as like 7.5 already, right? And more like corporate markets go as high as 8 or maybe even beyond already.
Okay.
Yeah, so market respond very decisively.
So the central bank, do you see any kind of pressure from the central bank to keep interest deposit rates at a certain level?
Yeah. So central bank, what they have done in the last 2 weeks is they have two windows, two key windows to basically inject more liquidity in the system. One is the open markets. But for the open market window, you need to have government bond. And government bond yield here is just crazy. Government bond yield here is below 4% for 10 years. Right? So having that liquid asset basically put yourself in a big market risk because bond yield keep increasing. And also a very high cost of liquidity. So banks do not hold a lot of government bond here. Right? So basically, banks do not have enough government bond to freely do a lot of open markets with central bank. So the second window, which central bank only has been active after a lot of advice from me personally, right, to the central bank, that they do need to do FX swap, right? They were very concerned with do FX swap because they don't want to be seen that, okay, Vietnam, State Bank of Vietnam enable dollarization, enable people keeping US dollar and then swap into Vietnamese đồng. They don't want any public accusation around that. So they have been very conservative, but lastly they did it. Last week, so 500 million. This week, 500 million. Too little. Too little for the market. So the swap market doesn't respond at all to that amount of money. Yeah, but they start doing it. I mean, the good news is that they almost have hardly ever, never have done it before. But now they started doing it. Yeah. Which is a good signal for borrowing for people who borrow US dollar like us. Because we could also swap with the central banks in addition to swap to the markets.
How much is the swap cost now? The swap rate?
Very low. So basically, the open market operation is at 4.5. The swap market, as per your state bank tenders, it's also about Fed fund plus 1%. Yeah. So it's also like 4.6, 4.7, something. But only for 2 weeks. Because by nature, state bank intervention is of short term, right? But in the past days, they could inject a 3 months money to the market if they sense that the market is lack of liquidity. Yeah, but that's almost window, not yet the swap window.
So, how long you expect SEB will continue this cruise swap? And would they continue into it when it's mature?
It's mature very quickly, right?
Yeah.
So if you say 2 weeks and every week they do 500, that's altogether only 1 billion. That's very little for the market, and it doesn't help the market at all.
Continue like
they would. I would expect them to continue. If not, at least at this pace, but if not, then a much bigger amount. I actually called them and already mentioned to them that it should do with bigger amounts. But I know that they have been very conservative. They don't want anyone to accuse them of dollarization. Once you swap to the markets, it means that, okay, people have US dollar, people can swap back to Vietnamese đồng. That means you indirectly enable people to keep US dollar, right?
2 weeks, it is nothing. So we cannot create a strategy if swap is for 2 weeks only, or is it just for the most?
No, you can. If you have a clear statement to the markets. The thing is that the SBB doesn't have any clear statement to the markets. If you do 2 billion, let's say each session, 2 billion US dollar. And if you do for 2 weeks, it's 4 billion US dollar. That's a significant amount. That will make the markets. But the thing is, they do only like a quarter of what maybe the markets need. Yeah, and they don't make any statement. If they make a statement, as long as the market needs liquidity, I will do the FX swap to the market. That's a different approach. But they don't want to make that bold statement because this is very political. Meaning that it's also a sensitive time of political change because we soon have a party congress earlier next year, and it is time that the top political leadership decide on who is the new leaders, who is on the Politburo, who is on the government, in the government, who is going to be the next governor. So everyone wants to be very clean, you know.
Maybe just you mentioned that you have already to approve higher interest rates for deposits. I assume that it is a movement in, because you are one of the leading banks, so it is a movement, a trend among all banks. This would again mean that your cost of funds are higher and you would need to transfer to the
Of course.
to the loans, and then it will somehow need to be, so the demand for loans will be less normally.
Okay, that's exactly what I mentioned about the variance. I mean, what I see, the long-term interest rate of Vietnam is, let's say, 6%. But unfortunately, with this kind of management from the Bank of Vietnam, interest rate keep rise and decrease and increase, you know, at a big variance. And when, you know, interest rate, if you have to talk about saving interest rate at 8%, it means that you will have to lend out at 10% or even more. It means that, you know, it doesn't work economically for many of the business. That it will, and then adjust the credit needs from the system. But then we'll see slowly we'll see the liquidity improvement and the LDR improvement in the system. But until then, we have to live with it. But this is the thing that we don't want, actually. We want it to be more stable, more predictable. Yeah. I mean, only it is predictable because we are banker, we are treasurer, we know, you know, the system. But for many of the people, it's very hard for them to do business planning.
So SVB used to buy dollars in order to inject VND, but are they still doing that? And you know
they haven't done it for a long time. Yeah. I think the last time they did it, maybe as far as I remember, was 2021. 2021. It was when, after COVID, US dollar interest rate was 0, and our market rate was like 4%, 4.5%. So if you see a big gap between Vietnamese dong rates and dollar rates, this is the time when State Bank of Vietnam are able to buy, because then money keeps flowing into Vietnam. Right? Then State Bank of Vietnam would perhaps be able to buy currency. But ever since, you know, dollar interest rate went up to 5% something, right? Then we no longer see any net currency inflow to Vietnam. In fact, the financial accounts of Vietnam, account balance of payment has always been negative, exception for 2023, when because 2023 interest rate was very high. But then 2022, 2024, 2025, always like a net outflow. Hopefully next year will be a better year in terms of in currency front.
What does all of this mean for the interbank assets and liabilities? We already discussed a little bit, right? Yeah. But I'm very interested to understand the dynamics there, because your assets, interbank assets and liabilities are close to matched, right? And these are mostly very short term, within 90 days, but probably the majority is much shorter, right?
Yeah. So interbanks here, I must say that most of the tenors, transacted tenor is overnight and 1 week.
Yes.
Yeah. It goes up to 1 month and 3 months.
Mm-hmm.
Repo, in repo transaction, we see more than the 1 month or 3 months.
Mm-hmm.
Yeah. But in clean money markets, it's more like less than 1 month.
Yeah.
Right. So that's for sure. So the interbank is more or less used for clearing the needs of having surplus funding. Like I have a funding buffer, then I have to place it within the interbank.
Yeah.
I think it's less in terms of trading nature. Yeah. And the reason why you see in the balance sheet of most banks having very big balance is because actually it's very stupid reason. I explain shortly with you. So in State Bank Vietnam has a ratio called LDR. It's 85%. It's a limit. In that LDR, you don't calculate any amount of equity. So like bank like us, having a lot of equity, it means that if we have the LDR of 85%, let's say only market one, so true loan and true deposits, and without any interbank, then we would have so much funding because we have a lot of equity as well, right? So it doesn't make sense for us. So for us, we need to also make use of the funding that's available from equity, right? It means that we have to increase our loans compared to our deposits, but doing that, our LDR, our true LDR will be more than 85%. But luckily, State Bank of Vietnam regulations allow interbank deposits to be calculated under the deposits, but interbank loan not under the loan, right? So that's a trick, and that's why banks have to keep very high balance in deposits. So that's including Vietcombank, right? Every bank. I mean, all the bigger state-owned banks have a major issue with the LDR from State Bank Vietnam, and we already have letter to State Bank Vietnam say that please stop, apply this, or maybe you have to include the equity into the equation. But State Bank Vietnam do not want to change. They want to wait and go straight to Basel III, right? But Basel III is even more complex, right? But that's the reason why banks want to keep, a kind of technical transactions, very short-term natures, and especially over the month's end. But it doesn't really increase their credit risk in the interbank.
So on the excess funding side, I understand, right? But from a liability management perspective, it's also expensive to because you see sort of the positions are sort of matched, right? So if you purely focus on the interbank assets and liabilities, sort of matched, all very short term, right?
Yeah.
So the spreads are very, very thin.
Yeah.
So
again,
yeah.
Interbank is not for trading. Unless you do a swap, right? Only for long interest rate trading happen only in the swap books, not in the, some, but not much in the clean interbank market because it's only for a month and less. And the amount of carry is almost nothing. So no people who really want to play with it. That the main play is actually around the swap markets, and maybe a little bit in the repo markets, where the term are a little bit longer, but then the amount is significantly smaller because people generally in the banking book, we don't want, like me, I look after both the trading book and banking book. I do not want them to take a lot, especially outright positions for longer tenor. No. It doesn't make sense for me. Yeah.
Is the repo market active here? Because you mentioned government bonds are not really a kind
FI bonds.
FI bonds.
Yeah, some
so FI bonds
active, but very significantly smaller compared to the interbank market, overnight clean banking market. But yes, there are regular transactions in the repo markets, but mainly, I think, between banks, then the FI bonds, with securities firm and buying, then to some extent also government bond, but to a lesser extent government bond. Yeah.
Are they? You decide what you would say it is repo eligible, or is it the central bank who say it is repo eligible paper?
I think this is a kind of like It's a regulated market. It is already a regulated market. We also have master repo agreements to locally made master agreement to sign with banks so that we are trading on in the same terms and conditions.
Yeah, but I mean, who decides the valuable papers or the bonds of which FI is okay for repo? It's just you, or is it the central bank?
There's no central.
No.
There's no central policies around that. So just we need to have risk limits to take on which kind of papers and how much a haircut. Yeah.
But this would mean that FI bonds and papers are liquid, so you can always trade with them.
Fairly liquid, yeah. Fairly liquid. So it's also depends on the tier of those. So if you talk about state-owned banks paper, it's a lot more liquid compared to a small bank paper. Yeah.
But still going back to the interbank, because I'm still not entirely there. I understand it's not for trading because the spreads are very thin. So from that point of view, and I agree that doesn't really make sense, of course. But if I look at the interbank assets and liabilities, they are mostly matched, right? And you don't really use the interbank liabilities for funding.
Exactly, this is what I mentioned earlier.
But since they are mostly matched, right, and all short term, and generate very minimal carry.
Exactly. Let's just have to improve the LDR ratio. I mentioned about the LDR ratio, right? Yeah. Without that interbank balances, in my statement or in Vietcombank statements, our LDR will reach the 85% of the regulatory State Bank of Vietnam. The reason is that regulation is not smart enough, not counting my equity. Yeah. I have a big amount of equity, right? Where I should use it to lend.
Yeah.
Yeah. So that's the only reason. Interbank trading, no sense.
Always.
No, exactly. So, if the LDR definition would change, how would you approach the interbank?
It would reduce significantly.
Yeah.
It would. We would not do it anymore. No. In fact, we have been always under pressure for each month end to do such things to compliance. We don't want to do it. And so is Vietcombank, the best bank in Vietnam. The same thing. They also have the same problem, having the biggest equity.
Yeah. And is there any interest to increase the size of the balance sheet? Is there any motivation? Because at some point it also inflates the balance sheet, right?
Yeah.
So is there any motivation to have a certain balance sheet size? Because we speak with a lot of...
Maybe for smaller banks.
Yeah.
Maybe for smaller banks, not for us. Yeah.
And why is that different for you compared to the smaller
banks? Well, because maybe some smaller banks, they want to show that they have a bigger balance sheet. So financial strength, size of balance sheet. But for us, there's no such needs.
But who derives comfort from those smaller banks showing bigger balance sheets? Because if you look very quickly, right? Let's say they have 20% interbank assets and liabilities, right? Because most of the banks have this sort of matched, right? There may be some deviation,
I think it's more
sort of
maybe for
anyone
not for analysts, right? Not for analysts.
No, exactly. Anyone looking at the balance sheet will say, yeah, but this is inflated.
But retail depositors or corporate depositors, maybe you would care, or maybe you don't understand about financial analysis of bank statements, and you just say, okay, this seems a big bank, and maybe a big bank is, and it's true as well, right? Big bank is harder to fail.
Yeah.
And it would be fair to assume that no bigger banks use interbank funding to fund longer term loans?
There are, but I can say, for instance, BIDB recently.
Which one, sir?
BIDB.
Yeah.
BIDB is a very big bank, the biggest bank in Vietnam. And they, as far as I understand, because they also have, they are state-owned banks. They have a lot of limits from other banks, right? And their funding position is not as good as Vietcombank. Maybe the ALM is not as good either. So they have been using it. Yeah. So there are some banks. I don't have the the whole picture, but I definitely say there are certain banks that use interbanks borrowing as but perhaps they would also have the techniques of extend the tenor. Let's say for doing so. If you say I borrow from you a 3 years loan, it's totally different than if I borrow overnight or 1 week, right?
Yes, it's very dangerous.
So where do you think this is heading to? As you said, you're already approving interest rates of 8% on deposits. Interbank rates are probably going to follow, right?
Interbank rates has been stabilized overnight, stabilizing at 7.
Yeah, but they
in the
probably
past 10 days or so.
They follow increasing trend probably.
No, has been stabilizing at 7.5 for the last 10 days.
Yeah.
Right. It used to be like 5% for a long time, but then a quick jump. But of course, always very volatile, right? But it has been, the overnight rate has been surprisingly stable at 7.5% recently. In my view, right, if we have, let's say, 8% deposit rates compared to, let's say, today, Fed decided to cut another 25 basis points, moving dollar rate to 3.5%, right? 3.5%. That's a 3.5% difference between dong and dollar. That's a very, very good cushion for the dong. Yeah. So market will start to realize it is a time to put your asset in Vietnamese dong. Even at a 8% interest rate, stock market will suffer. Real estate market will have some slight suffer. Yeah, 9% is suffer even more, but 8% is already like a strong signal that for any investors into real estate market and stock markets to reconsider. I mean, Bitcoin and gold, they have different drivers from international markets, but the portions of money putting in Bitcoin and gold is a lot less, much less compared to real estate and stock markets. So you see that. In conclusion, I think it is nearing the end of the cycle. I hope that actually state banks of Vietnam would have a better statement, so that make the market confidence. So that's people don't like crazy put interest rate up, which is very damaging to the economy, right? Yeah, but I mean, in my base case, they won't do anything apart from doing maybe increase the size of the swap. Yeah, but we'll see. Hopefully, in the 3-month times or so, we'll start to see a decreasing trend, because when it impacts the economy, right, business cannot borrow money anymore. Yeah, and it is time for me to manage my interest rate risk. It's hard. It's very hard in Vietnam. We don't have any swap markets, interest rate swap markets. We have currency swap, but we don't have real good interest rate swap markets. Yeah. So I share with you that we make more money in time interest rate go up this time, because my repricing average the repricing tenor of the liability was 6 months, and my liabilities on the asset side is only 4.5 months. So it makes money for me because my asset reprice faster than my liabilities. But very, very soon, I need my assets to be repricing longer than the liability, or at least as equal. So I have to be very, very much managing my interest rate risk profile in times. To be honest, in 2023, we have some big loss in my interest rate risk banking book because of that. So I'm very aware of that. Whether I can fully mitigate that is another question. Yeah. So I will have my FTP to be very active to basically steering the repricing profile of the new booking. So right now, for instance, my message to the business, also I already changed my FTP, right? I prefer the 6 months over the 12 months deposits. Yeah.
Even though you mentioned that you expect that as we increase the swap volume, then it will not have the increase sharp in the interest rate. But do you believe that that's a level of interest rate, the optimal level, so that pressure on US dollar exchange is not as high as sometime in October, right?
Yeah, you see that's recent with the current interest rate difference, let's say of 3.5%. There's no more currency pressure on the currency front. In fact, 2 weeks ago, we made a quick online conference to our customers, to our corporate customers, and I was the one conducting it, right? And suggesting to our customers, to export customers to hedge their revenue. Basically, because we see it is a kind of turning points for the currency markets. If the interest rate is so high, so a lot of customers follow when they do the hedge, right? So Vietnam markets turn very quickly. So in October, as you mentioned, right, or September, a lot of customers go for a buy hedge, and now people start to go for a sell hedge. Yeah. So yeah, and then you see a lot of retail people who start to switch their assets from dollar to dong. Yeah, in this year or last year, we see sharp increase of retail US dollar deposits because everyone expects US dollar to increase, to appreciate again down. But next year would be a different game.
Clear.
Okay.
That helps. If I can bring up one more topic, that's the liquidity management. And you already mentioned that you keep buffer. But we also discussed yesterday that the LCR, let's say Basel III LCR, is managed very tightly, right? So that levels close to 100% are not uncommon. And also with having in mind that once LCR is implemented, the central bank limit will probably start at 60%, right? So it will slowly go up probably to 100%. So if you manage your LCR 100%, you're still well above the central bank expected initial limit, right? But still, managing LCR at 100% is fairly tight, right? If I'm coming from my international kind of.
I know.
Right. So how do you manage that? But also, how do you intervene if liquidity runs tight, right? Or maybe if you breach the 100%, because you will breach, right? If you manage it close to 100%, you will have breaches.
Yeah.
How do you manage this?
Okay. So LCI at the moment is a kind of I still consider a soft limit for our internal management.
Yeah.
And there's no regulatory limit on that one. And to be honest with you, if there is a regulation around that, I'm not as confident as maybe our risk people say now with the LCR, because I think there is a major transformation of business activities around managing liquidity. And we have reviewed the first draft of the State Bank Vietnam regulations.
You mentioned this.
Yeah, and it is actually, I mean, I don't have all the details now in my hands, but the team report to me, you know, in different items, is a lot more conservative compared to the Basel recommendation.
Yeah.
So, but of course, banks like us are feeding back to State Bank Vietnam. It's not going to work. You know, it's don't be too ambitious. At least at first you need to get people get used to it, to a new regime, right? Yeah. So at the moment we have no clear pictures of what's going to happen. The timeline is also unclear to me. Initially, they target for 2026, but I think that this is more or less because of political pressure. I think they would extend the deadlines, and to what extent the details of the regulations come out, we don't know yet. What we need to know is we have to be on top of developments. And honestly, from the ALM perspective, we will have to be steering this with all the business of what kind of products, liquidity deposits and liquidity products we need to pursue, what kind of change we need in terms of managing our deposit base, so that we suit more our the new LCR and then etc. So to be honest, I'm not sure, I'm not confident for now, but what we do is we need to ensure that we are amongst the banks that are on top of it and be in front of of the new developments, and to make sure that we change our deposit products in accordance to the new regulations, so that we can take advantage of it. But not confident right now.
So the talks are currently about NCR only or NSFR?
Both. Yeah, NSFR is okay to us. I mean, we both in terms of Basel recommendations and the State Bank of Vietnam draft. It looks okay to us. Yeah, but NCI is a major issue.
Since you're one of the larger banks, you should be able to manage that well, and also you're involved in the discussions with central bank, and you can also steer those discussions.
Yes, we would be. Perhaps my plan is that once we have a little bit more time, maybe I will go to SBB. In fact, the one in charge of that regulation, he's living in the same apartment complex with me. So I feel him a lot. Right? The other day I just faced him in a coffee. I mean, then I sit with him then for 1 hour to discuss. Okay, but that's like 4 months ago. I asked him. Initially, they want for 2026. I said, but only about 3 weeks ago, then they released the first draft. So we want to be on top of it, definitely, and be prudent. And definitely it's a tougher one and a more real one compared to the current regulations. But current regulation, I think there is a key stipulation. The LDR is still big, but there are the 30 days liquidity ratio and the liquid asset ratio. There are two ratio, which makes sense.
And if NCR and NSFR introduced, then ASA will be removed, or is it?
This is also one of the things that State Bank Vietnam asked us, whether we banks want to replace or just in addition. So our view is replacement.
Does it make sense to keep them, right?
Yeah.
But if imagine that the Basel III would be implemented, just the plain Basel III definitions, what would you need to do?
Yeah, so Basel III implementation, we would be quite okay, right? We would be quite okay, but there are some recommendation in Basel III that's very difficult to apply for Vietnam context. Number one, I can mention two examples here because we went to Basel III a lot of times. So one of the things is that the stipulation requires, stable deposits, has to have, deposit insurance. Deposit insurance in Vietnam is only maximum 75 million, which is tiny amount. And so it means that anything beyond that, whether have a long-term relationship with customers, etc., consider to be unstable deposits, which I don't think is right. So that's number one. Number two is the stipulation in Basel III around existing relationships, operating accounts, etc. So I think to implement it in a clean way is very difficult, not easy at all. Yeah.
But indeed, I agree. But the deposit insurance comes from a mindset where the level is much higher, right?
Yeah.
Generally.
But in Vietnam, unfortunately, government doesn't want to insure. But again, Vietnam, right? Whatever bank run you have in the last 20 years,
it's fully covered.
The people who the people money, the people never lose their money.
No.
So there is an implicit guarantee. There's no explicit, but implicit. Yeah.
Interesting. But I'm sure these elements will be discussed before implementation. Right?
Yeah. That's the thing we do. Yeah.
Maybe jumping back to the interest rate risk, there are no prudential norms, so no norms from the central bank for
capital
for managing this risk, right?
There is.
Risk?
IFC also have some, right? Stipulations in terms of managing interest rate risk. State Bank of Vietnam also have, but honestly, I think the risk is much higher than actually what State Bank of Vietnam requires. So we manage it a lot deeper.
Internally.
Yeah. So let's say you can have easily a 200 basis point move in Vietnam. What does it impact to the whole books even if you have only 12 months repricing, the PVO1 may look small, but it's 200 basis points. It can be a big win or big loss of money. So I'm very honest with you. That's we have to be very careful with it. So not just liquidity, but also interest rate risk.
What is prudential? I wasn't aware that there is a.
I remember there is a stipulation around basically compare the certain repricing gap comparison to our capital.
Okay.
So, but generally, it's very easy for us to meet the ratio.
Okay.
It means that but in reality, right, the P&L hit to the books can be a lot bigger.
So the gap on capital, maybe it's manageable, but if the shifts are 200 basis points, then
or even more, right?
Yeah.
Like in 2022, it's more than 200 basis points. Yeah. And the thing is, it moves not like in the US, right? It moves gradually. Here is like within 1 or 2 months, it's already 200 basis points. Okay, the time is also up. And I hope that I make
very quick question.
Sure.
Have there been any major breaches in your other internal limits? We just discussed the ALCO, right? So are there any other ratios which you have been focusing on because maybe they were tight or there were some breaches or concerns?
Regulation, definitely no. So far, I mean, the whole time we didn't have any breach, because breaching any regulations is it just look really bad. Not just looks, it have implications on on the way if you apply for new things.
Sure.
They will say, oh, you have breached a regulation here.
Yeah.
So the answer is like here, no. Right? So it's very, very careful with the regulation breach. Internal, hardly ever. But I remember we have reached one time the interest rate. I think the interest rate risk indicator, because I think one of the last drawdown. Yeah, so I think we have, to be honest, I think one time.
Okay.
If as far as I remember, about 6 months ago.
Okay.
6, 7 months ago.
Thank you.
Okay.
Thank you so much. Very interesting.
Thank you.
Thank you. Hope I give you certain assurance of how we manage liquidity and interest rate.
Yes,
Please?
that was very helpful. Thank you.
Thank you.
Em ơi,
Kia thì thế nào?
Lia anh chịu gì?
Thứ ba thì à? Okay. Since hai cái Nam nhiều bị just another third swap.
Okay.
Now. So this week they will do 2 swaps. At least 2 swaps. Oh, that's good.
Longer than 2 weeks?
No, the last week
Only
they
2
did
weeks.
500 million. This week they already did 500 million yesterday.
Yeah.
And today they did another 500 million. So that's better 1.5.
Yeah.
And maybe they will do more. I mean, the key for me is the indication that they do more.
Yeah.
It will have